have seen two very important determinants of demand as well as price of gold. One is interest rates. So typically, as we discussed earlier, when interest rates are high, particularly real interest rates are high, demand for gold comes down because opportunity cost of holding gold is high. And similarly, when interest rates are low, people are more willing to hold gold. Right. So one is your real interest rate. The second is actually the fear or the risk factor in the world. Right. If you see any crisis that happens, any economic, any geopolitical crisis, right, the safe haven asset is gold, right? So whenever the risk levels go up, there is a big kind of pull in for demand towards gold, right? And increasingly, the safe haven factor of gold has been the overriding factor, right? Because now, as we discussed, there's been huge financialization. So even households, institutions, everyone is investing. So when uncertainty goes up, when risk goes up, people who are invested in stocks, bonds, want to go to a lower. So everyone kind of moves towards gold, right? And now you have all these gold ETFs also that you can move towards. So I think one of the biggest drivers of gold demand is risk or fear, right? If we look at price driving, so jewelry, which is the largest component of gold demand, that actually has a negative correlation. So when gold price goes up, naturally the demand for jewelry actually comes down. But many of the other factors are actually not so correlated with the price, right? And sometimes price goes up in the times of heightened risk or heightened uncertainty or geopolitical turmoil, and actually demand for gold also increases at that point of time. I think if we kind of step back and today's environment where we see globally geopolitical risk heightened, right? So there are multiple hot wars that are on at this point of time. We look at the fact that now literally post-COVID fiscal deficit is not being considered a bad thing. Literally every economy is going for larger and larger fiscal deficit. I think it certainly means that you will need people to gravitate towards some hard asset, right? Now people have talked about de-dollarization, but the biggest challenge to that is that there's no other kind of reserve currency, right? You have challenges with the euro, and there is no real kind of third alternative, right? So where do people gravitate towards? And I think gold therefore becomes really one important, as we say, store of value, right? I think new age Gen Z probably think it is Bitcoin and not gold, right? So I think those are probably things people believe are stores of value that will not be debased by expansionary monetary policies. So my actually belief is that as long as even if interest rates stay high, as long as the pace of money supply creation remains excessive, as long as governments run high fiscal deficit, you will see a gold as an asset do well. The biggest source of demand for gold is actually for jewelry, right? Right. So roughly about 45% of demand is from jewelry, and the annual supply of gold is about 5,000 tons, right? And 45% of it is really going into jewelry. Lately, another big driver of demand has actually been the central banks, right? So they have been annually taking between 15 to 20% of the global supply. Another 10% is investors, various kind of investors, including retail, who buy gold as a store of value in terms of gold bars and coins, right? And that is becoming increasingly popular as well. So that's about another 10%. There is another 10-15%, which is what I would say financial demand of gold. So now ETFs on gold are very popular.
Right.
And I think today there are probably the total gold ETFs are about $300 billion worth, right? So that is another. And then there is a small amount of demand that comes for technology purposes, etc. Right? So that is really the broad sources of demand. So the returns on gold have come partly also because your currency depreciated. Right? So if you looking at this data some time ago, that last 25-year return on gold has been 15% in India, right? But if you break it down, how much is gold prices versus how much is INR depreciation? So actually, INR depreciation is only about 1/3, 2/3 has been increase in price of gold as well.
Right.
And I think this holds true for virtually every currency, including even dollar investors, right? So I think more recently, there has been factor that have been really triggered some of the central banks to more actively look at gold, right? India always used gold in its reserves, and its share of gold in its reserves has gone up from 5-6% to 9% in the past few years. But many central banks and some of countries with very large forex reserves like Korea, China, Saudi Arabia, Japan never really use much of gold in their reserves, right? And for them, gold as a percentage of their reserve was a very small 1-3%, and they have realized the importance of having gold, and they have been large incremental buyers as well. I think their change in behavior has come on, in my mind, on account of two counts. One is what happened in 2022 when Russia lost $300 billion of their forex reserves, right? Because their forex reserves were in dollar assets, and those dollar assets were confiscated once sanctions were imposed, right? So I think this geopolitical event put a fear out there among central banks that, okay, there's a risk to this asset. So therefore, and so again, I forget the number, but Russian central bank has, I think, $50 billion, $60 billion of gold reserves. So at least that part of the reserves is secure. They lost the other reserves. So I think that prompted many central banks, including China, to aggressively start looking at gold as a part of their reserve basket. The second thing that happened around the same time as well, and as we talked about, it is also for the central bank a store of value, right? So whatever reserve asset they keep is a store of value. And everyone was using US treasuries as a store of value. And in 2022, they realized that is not the case. US treasuries is not a risk-free asset, right? Because as US rates went up, people had huge losses on these assets. And if you would recall, Australia, so RBA and the Swiss National Bank lost humongous amount of money, right? And I think SNB had a $140 billion loss that year. For the Australian Central Bank, actually their equity got wiped out. So for positive, they went to negative equity. So people realize that over-indexing on just one asset class is also not the right approach, right? So I think these two factors triggered a shift more towards gold within the central bank reserve.